Hi everyone. This is the lecture 29 of the 2026 mentorship program. So in this lecture, I will be live trading the New York section, and which I've explained on the previous lectures that I'm going to spend the first 10 to 20 minutes explaining what is my current perspective in price from the weekly down to the 1 hour time frame. And if you have been going through the lecture and you're still not subscribed to the Telegram group, make sure you join the Telegram group. You have not, and you're not subscribed to the YouTube channel. Make sure you are subscribed to the YouTube channel so that you can get a quick notification or of a more closer person to what I'm actually giving out in 2026 to have a recent feedback on what I will be talking about and how I'm going to be presenting the 2026 mentorship program. Now, in the recent lecture, I posted a market preview, which was the dollar index. I talked about the dollar index, gave you guys my perspective in price if I were to be trading the dollar index. So we're going to look at what price I've done from on Monday and how I'm currently looking at price and what I'm actually looking at in price doing going in this week. So first, let's move to the dollar index. Now, this was a position I took during the London section. So you can see it was during the London section and my drawn liquidity was seeing high. So this was a 1 minute setup, which was based off the 1 minute trade plan, which I've explained. And you guys have seen me taking multiple trades using the trade idea. So this is one of the trade I told you guys I normally trade during the London section if I see that there's a clear draw on liquidity from a daily buyer's point of interest. So that was the reason I was involved in this trade. So let's move to the dollar index. So on the dollar index, let's take this off. First, let's go to the 1 hour time frame. I want to take us some few animations from the 1 hour time frame. Check this out. That was the area I was actually looking at price we're expecting to trade lower, or there will be a retracement to the 4 hour fair value gap. So here's the opening price. First, let's move to the weekly time frame. Let's talk about our perspective on the weekly time frame. Let's take out some few animation away from the charts. Let's have a clean chart. So let's hide. Let's hide some of the animation. Okay. So the dollar index last week, I showed you guys that I'm actually anticipating a continuation of the trend in price trading higher to run the buy side liquidity. I told you guys that that was my draw on liquidity. But I told you guys that I will be most likely going to be focusing on the daily time frame to look for that daily timing in price to where the daily is actually going to be trading to. So Monday, price respected the daily fair value gap and started trading lower. So far, price have been trading lower, trading deep into the weekly fair value gap. Now, the trade idea is still current. I'm still anticipating a continuation for price to run the buy side liquidity. Because if price were to trade through the weekly fair value gap, we still have an order block. We still have a weekly order block. But if price were to fail in supporting from the weekly order block, then I can say that I will be anticipating lower prices to run the swing low. So I've talked about the candlestick. The rules I have around the candlestick, I told you guys that if I'm anticipating higher prices and price trades below the mid range of a weekly candle, it's most likely going to be in price that price is going to run the candles low. So whenever I'm anticipating higher or lower prices and price trades below the mid range of an order block, I'm going to be anticipating a counter trend leading to a reversal in that trend in running out the candles low. So I normally call it my reversal pattern, but at this point, price is still current to price because we have a proportion order block at the low of the weekly fair value gap. But if the downtrend were to continue and price trading lower to trade below the mid range, then I will be anticipating lower prices. But if the daily is going to be indicating a support in price trading higher, I will be anticipating higher prices. Now, down to the daily time frame. On the daily time frame, so let's bring up the animation on the daily time frame. Okay, let's see. I think I'll keep this. Let's see. Okay, I think this is enough for now. So on the daily time frame, price open on Monday, create a daily fair value gap. I remember I told you guys about the daily fair value gap that if price were to respect the daily fair value gap, the drawn liquidity should be the swing low. Monday respected the daily fair value gap, traded lower into the weekly fair value gap. And looking at this daily chart, nothing on the daily chart is actually telling you to buy, which I told you guys the daily time frame will give us the timing and price. Nothing on the daily chart is telling us to buy. So we are most likely going to be patient in price to wait for the alignment in price. If there's going to be a continuation in price, we should wait for the alignment that price should trade higher. But as long as price is still on a downtrend and we ain't seeing any support in price from the daily perspective that price will be supported in trading higher, then I will be anticipating lower prices to see if price will trade down to the mid range. Now, the trade I'm going to be taking with the idea is mostly going to be a short term trade. Mostly is going to be utilizing the 15-minute, the 1 minute, and the 1 hour time frame. That is going to be based off a daily delivery, looking at price at a specific time during the London section and the New York section to see if there's going to be a continuation in that trend and price trading lower. But the overall idea, if I were to take a weekly expansion trade, I'm still going to be patient in price, still going to wait for that alignment in price to see if price is going to trade lower or trade higher. The daily is going to be indicating the bias for a weekly expansion. Just like how price did last week, still looking at that same price action to where price is going to be expanding throughout the remaining week. Now we are Tuesday and Monday traded lower, Tuesday traded lower. Wednesday, we might see a few resistance in price. Maybe a counter trend to a daily fair value gap. Now, depending on how price is going to be closing, but we might not even take a trade throughout this week. Remember, we're still open up to the idea of not actually taking any setup till we can identify a daily confirmation trend. So either it's going to be trading against the weekly perspective or it's going to be aligning with like the weekly perspective. So you guys understand when I say I'm using the daily for the exact timing to what price is actually going to be doing. I have a perspective on where price should trade to, or what is the parameter within price, what range are we in. Then I use the daily to know the timing to when price is actually going to be seeking out a specific liquidity. What I've been doing throughout the year, and it's what I'm going to be doing going through the 1026 mentorship program. So down to the 4 hour time frame. On the 4 hour time frame, I talked about the 4 hour fair value gap. I told you guys that if there's going to be an expansion in price trading above the 4 hour fair value gap, I'm looking at it as an inversion fair value gap to trade to the daily fair value gap. Now, price traded to the idea, but it happened with a gap between last week closing price to this week opening price. But the price opened above the 4 hour fair value gap, so it's still aligned with the idea in trading higher to run the high. So price traded to the daily fair value gap, respected the daily fair value gap, traded lower, took out previous week low. So we should indicate it as previous week low. So took out previous week low and traded lower. Now I've been following the 1 hour time frame in the 1 hour trend trading lower. Now that was the reason I took the setup on the 1 minute time frame that I showed you guys on Hero USD. It was actually with the idea that price is actually respecting the daily fair value gap because Monday respected the daily fair value gap, traded lower, took out the previous day low, continuation in the trend. Now this was around the Asian section, so I wasn't actually looking at price during this time. So when I was looking at price in the morning before London opened, price was at the 1 hour fair value gap. Price already traded through the 1 hour fair value gap. So I had the idea that if price were to run this high, I'll be anticipating a counter trend on the daily time frame in price trading higher. But most likely not going to take it as a high probability setup, just something to keep me busy so that I can stay, study price, look at the price pattern, and understand what I'm actually trading. Because I told you guys, if you have any advantage to spend more time on the chart doing nothing, it's way beneficial. It's more beneficial to you looking at the chart, doing nothing with no expectation, just looking at price, looking at how price is actually reacting to a point of interest. And that was the idea going in. But I stand to it that if there's going to be a continuation on the 1 hour trend, I will be looking at I will be looking at the trade setup, which I've taught you guys the trade setup when a time frame is trading to a premium and the overall trend of the time frame is a downtrend, then I will be looking at price retracing back to a discount. And that was the idea. After price traded lower, I was still looking at the 50 MA because there was a clean alignment between both time frame. So it traded to a premium fair value gap that led to the setup. So it was a 15 minutes fair value gap I was looking at. Now there was a 1 hour fair value gap and they were still aligned with the idea. So that was all got me to the trade. So when you move to the 1 minute, you can see the trade setup. Here's the trade setup. Stop was at the high, and our target was a swing low. This is the exact trade. Now remember, the dollar index and Hero USD are inverse correlated. So on the dollar index, on Hero USD, I took a buy in price trading higher. Now, I know you guys might be wondering that what is my current perspective in price based on a daily delivery or on a 1 hour trade plan or on a 1 minute trade plan, which I've told you guys is on a 1 hour trade plan, I don't have a clear perspective. I only have a narrative or a general perspective that if price were to do this, I will be doing this, and if price were to do this, I will be doing this. So most likely not going to be taking a setup now, depending on how price will be closing from Tuesday to Wednesday to see the development in price to actually have a perspective. Now, when it comes to the 15 minutes, which is the 1 minute trade plan, so far I used the bias from the higher time frame. Now, how I do align it is that what is the daily bias? The daily bias is a downtrend. Price is currently in a downtrend from a daily perspective. We're expecting the daily fair value gap. Second is that would will the 1 hour lead to a continuation in that daily trend? Now I'm trying to tell you guys the whole idea on how I actually got to the setup, and that is actually how I do trade the 1 minute. So the first, now let's write this a little bit. Let's so first is the daily time frame. So we're just going to okay, actually had to write with the writing tools. So it's going to take more time to write all this. So let's just take it out and try to use short forms. Let's take it out. Let's try to use short form. Okay, let's do when the this is the bias. The daily is the bias. So I use the daily for the bias. What is the daily bias? Now it doesn't matter if price have taken out the previous day low, as long as the trend is still aligned, and it doesn't matter if price have taken out the daily draw on liquidity that there might be a retracement. No, I'm only looking for a short-term 1 hour continuation to a recent swing low, to a failed swing high or a failed swing low. That is the idea. But I want it to be aligned with the daily bias because I find it more profitable, more highly in price continuing the daily trend. I'm talking about based on statistic data that I've been trading because I've been spending a lot of time trading the 1 minute recently just to understand. Now, I haven't gotten to the profit plan in the 1 minute trading plan. It's mostly between the range of being perfect. I'm still working on how to manage my risks correctly because I'm actually executing more faster using the 1 minute. So it's still on a learn phase, but I'm just trying to give you guys the plan on how I actually get to my bias. So I use the daily for the bias. Now this is depending on what price is doing on the daily time frame. I'm going to be sticking with the idea in price trading. And it doesn't matter if price have taken out a previous week high or a previous week low, which you can see in this example, price already took out the swing low. I'm only trading a short-term continuation in that trend. The short-term continuation in the trend is actually what I'm actually trading. So let's move to the 1 minute break so that we can see the writing. So the daily for the bias, now you understand how I do look at the bias. Next is the 1 hour time frame. This is going to be trend. The 1 hour trend. Now on the 1 hour trend, there's a specific price pattern I'm actually looking for on the 1 hour trend. when I have a daily bias to where is the most likelihood in price trading to base off, you can use the candlestick formation, you can use TRT, whatever you want to use, but as long as you have a system that you use in defining the daily trend, the daily bias. Second is the 1 hour trend. First is the 1 hour trend aligned with the idea. And if the 1 hour trend is aligned with the idea, there is a specific pattern to what I'm actually looking at in price, which is in, so let's say this is a 1 hour fair value gap. It doesn't matter if it's a 1 hour fair value gap or a 1 hour breakouts or a 1 hour order block. It doesn't matter as long as price is at a premium, a discount, to look for a continuation from the 1 hour point of interest that is aligned with the daily bias and you anticipate a run and your target is the buy side liquidity. So we're going to call this the buy side liquidity. Now the same goes to this same idea, looking for price to run the sell side liquidity. So daily bias, 1 hour trend, a specific continuation pattern. Now this is a continuation pattern. Now there's some times that I do trade counter trend, but it's not all the time. But I will tell you guys that when you when it comes to high probability setups, that is most likely to come true, most likely going to be trading to the bias, is going to be the two major pattern. There are sometimes I do trade counter, which you might see me trade a counter trend on a live section, but know that I'm only trading a counter trend based off experience because I've seen a specific 1 hour pattern or a specific 1 hour trend that I well assured seen it before and I'm well assured ready to take the risks if price were to trade to what I'm actually anticipating. And when it comes to a counter trend, it's when the counter trend is going to be aligned with the daily bias. Those are the times I take those counter trend. And that was the reason I added the 15 minutes. So once I identify the 1 hour trend and I'm looking for price to trade to a specific level, the next time frame I use for my confirmation is the 15 minutes. I use the 15 minutes for the timing. The only time I'm going to the 1 minute to look for a setup is when the 15 minutes is ready to, so let's just make it, when the 15 minutes is ready to expand. So when the 15 minutes is ready to expand, those are the time I look for my entry. So you use the 1 minute for your entry. So let's do this. The 1 minute is going to be UN 3. Now, I will explain on how I use the 15 minutes for my timing and how I do use the 1 minute for my entry. I'm going to explain it. So first, let's go back to the specific pattern. I think this is the best way we can put it. Now, let's say price retraced to the 1 hour fair value gap. Let's say price retraced to the 1 hour fair value gap and price is currently at the 1 hour fair value gap. But on the 15-minute price is still on a downtrend. The 15 minutes is still on a downtrend and the 1 hour is currently at a support that is align with the daily bias for price to continue to run the buy side liquidity. But the 15 minutes is not aligned with the idea. You're going to wait for price to align with the 1 hour trend. When the 15 minutes is aligned with the 1 hour trend, then you look at the 15-minute point of interest to use for your entry. Now, sometimes, which in this example is still the same, that the 1 hour will be on the same trade with the 15 minutes and using the same point of interest. Those are the times you use the 1 minute directly to take the trade. So you use the 1 minute directly to take the trade when they are aligned, but know that you're only looking at price to buy or sell whenever price is aligned with the perspective. Whenever the 15-minute trend is aligned with your higher time frame perspective. So understand when you're actually going to be looking for the timing, when the timing is aligned with your perspective, and when you are actually going to be looking to take a setup. So the same goes to the downtrend. The same goes to the downtrend. When you look at a trend, sorry, let's push this back. When price retraces to a 1 hour point of interest, look at the 15 minutes. You need the 15 minutes to be in sync with the trend. If it's not in sync with the trend, you wait for that shift, you wait for that correlation. You want both time frames to be correlated before actually looking for your 15 minutes, sorry, your 1 minute entry, and your target should be the sell side liquidity. So this is two simple pattern. You can start from this, and when you get to know price more better, you can expand your knowledge on how to actually take advantage of it. Okay, there's a question on the Telegram group. Let me see. Okay, the question is that can we use the 5 minutes for an entry? Now, you can use the 5 minutes for an entry. Why? Because it's still the same trend. As long as you can identify a 5 minute shift in structure or a 5 minute continuation trend within the 1 hour price range, and you are sure that it's aligned with the daily bias, then you can take advantage of the 5 minutes entry, which I will show you guys in this example. That is the trade I took this morning. I will be showing you guys the trade. So first, let's take this off the chart. Let's take this off the chart. Let's clear most of it. Okay. So first, let's start from the 1 hour time frame. Now you guys already understand the buyers. You already know what is my draw on liquidity currently in price. So on the 1 hour, there was a retracement. So let's take this out first. There was a retracement to a 1 hour fair value gap. Let's call this a 1 hour fair value gap. So that you guys can understand it more better. Here's the 1 hour fair value gap I talked about. Now, in this setup, it's actually a downtrend continuation. So if I were to place it too, you can see, and I looked for my entry after a retracement to the 1 hour fair value gap. Now, after the retracement to the 1 hour fair value gap, you move to the 15 minutes. Now, the 15 minutes is you're going to be asking yourself a real question. Is the 15 minutes aligned with the trend? Which in this example, yes, the recent swing high to the swing low, according to the time I took the setup, price was at the 1 hour fair value gap. So if price is at the 1 hour fair value gap and it's aligned with the 15 minutes fair value gap, you can see the timing is in sync. Here's the 15-minute fair value gap, and it's fully aligned with the 1 hour fair value gap. So what is left is for me to go to the lower time frame and look for my entry. Now you can still use the 5 minutes for your entry. You can still go to the 5 minutes to look for your entry, but I just like to use the 1 minute. But for those mostly at your first spot, you look at both time frame, or you stick to either of them. It still doesn't matter as long as you're using the right technique to do actual entry mechanism. You can take a full advantage of the setup. So here's the 5 minute fair value gap respected the fair value gap traded lower, drawn liquidity, swing low, took out the swing low. So the bias is still aligned. Learn how to correlate the time frames. Learn how to wait for the right entry before actually taking any setup. So let's talk about the dollar index, and I think this will be a short live section because from the 1 hour time frame, we're not actually looking at any strong trend to say that I'm anticipating a retracement, and the retracement might take time. And but first, let's talk about Hero USD. So with the same idea on Hero USD, let's hide this. With the same idea, 1 hour fair value gap. So this morning, looking at Hero USD, I was looking at Hero USD from this order block, thinking the price is already below the mid range of the order block. So if there's a run on the sell side, I'm most likely going to be studying price, not actually taking a trade if price were to run the sell side liquidity. But you can see the price is not run the sell side liquidity. Instead, price aligned itself with the daily bias of a possible continuation. Retracement to a 1 hour fair value gap tells you that there's a likelihood of price expanding higher. Next, you move to the 15 minute. 15 minutes, 1 hour fair value gap, still aligned with the idea of the 15 minutes fair value gap. So you can see it's well correlated with the dollar index. So it's still the same. Retracement, entry. Now I will be posting I think a screenshot about the entry just to show you guys that I actually take advantage of the setup in case guys if you want to see the actual setup just look at the Telegram group. There'll be an entry of when I actually took the trade. That's if I'm going to be remembering when to post it. But here is it, and here's the entry. Now for my stop, swing low, and the target is the high. Now about the trade management, I'm still working on what will actually fit to the trading condition of the 1 minute. Because there are some times I notice that if the 15 minutes and the 1 minute are aligned in the bias, it takes time for the 1 minute to deliver when the 15 minutes and the 1 hour is aligned with the bias.